Yes, hello, good morning, and happy Tax Savings Tuesday. Again, this is Christopher Waikoko. I'm the Chief Executive Officer and Marketing Officer for our company, Waiko Tax. So we do all year round, all in one accounting and also now a wealth planning service solution. As we continue the Tax Savings Tuesday, we bring you some practical tips, but now we're going to focus for our healthcare heroes. So we're going to discuss what are the tips that they can do, the top business deductions that they can avail if they have their own practice. But at the same time, we will also discuss some basic tips of bookkeeping in preparation. So because I believe that there should always be uh, continuous guidance for this particular matter, enable for you to make the most out of your business. Okay, so I'm gonna share my screen. So this, okay, share. All right, so we're going to make this presentation. This is only less than 30 minutes. Now, let me see if I could share my screen. All right, so there you go, share. Hmm. Okay, our screen, share. Is it picking it up? Okay. I don't know, for some reason it doesn't share my screen, but anyways, let's do this one more time. So share screen. Oh no, no, I already know how. So maybe because of this one. Okay, so there. I'm going to share my screen. Oh, screen share. Okay, there you go. Okay, it's gonna be weird. There you go. All right, so here we're going to discuss about. Oh, there's a better way to share the screen. Okay, one more share. Just you can just share the window. Okay, there you go. And then go back. All right. Okay, perfect. There you go. So we're going to discuss about the 10 tips as for all the healthcare professionals that we're dealing with. So we're going to discuss about what are the bookkeeping tips and also the tax deductions. Actually, before we proceed, this is just one of our valued customers that we were able to resolve the problem with their audits. And it takes more than 6 months just to resolve this, but because of our help having Waiko tax on their side, we were able to resolve and remove the penalty. So now our client has a sigh of relief and sleep in peace with no worries. And just a disclaimer that this presentation has been prepared for informational purposes only. It is not intended to provide and should not be relied on any tax, legal, or accounting advice. Example and other materials in this webinar are only for illustrative purpose and should not be relied on technical answers. Wyco Tax is a virtual outsourced accounting and wealth planning company, and Wyco Tax is not associated with any institution. On this presentation, and is a private business provided resources for small businesses. If you would like to watch the replay, just go on our YouTube channel, Chris Wycoco. And our target client right now are doctors, healthcare workers that own their clinic. For example, we have Gloria, and she's preparing her tax and financial documents. What are the things she needs to keep in mind related to her financial documents? Are her books and tax records up to date? So we usually use the acronym Tax Pro Tips. The first tax filing deadlines, letter T. The deadline for the what do you call this? The C corporation, and also for 1040 would be April 15. And then for March 15, these are the partnerships. Partnerships and S corporations are due on March 15. So you have to remember, even if you don't file on time, you have to pay on time because there are two penalties that the IRS always impose: not paying and not filing on time. And not filing on time is usually higher than not paying on time. So even if you're not ready for your books, just deposit. If you know you owe 20,000 last year, you could still deposit that money without filing your taxes. And never forget to file an extension ahead of time. Even if it's not April or March 15, just file an extension when the tax season opens on February 1. So at least we have the tendency to forget, especially if we're doing a lot of things all at the same time. And then the other tax deductions that you could do is you can do automobile, you can do your uniform, you could do subscriptions. Remember that you need to have a business at least. You have to have an LLC. You need to run your own clinic. If you're not running your own clinic, then the deductions are also limited or might even not allowed. Because after the 2018, they changed a lot of deductions, but they increased the standard deductions for people that don't have businesses. So that's why you have to consult a tax professional. What are the qualified subscriptions, uniforms, education, employees, contractors, improvement of your clinic, anything that you need, gas, mileage. So those are the things that you want to make sure that you're deducting almost every type of business expense. Letter A for your bookkeeping, you need to automate the automate and integrate your record keeping. You could use QuickBooks and then link the bank accounts or credit cards to your to your QuickBooks. We always suggest that you don't need to have a lot of what they call this bank account. You could only keep one credit card and one debit card. That's all that you need to run the company, because the simpler it's better for your record keeping. And then extend your personal expense to become business expenses. The other thing that we discussed that you may not be checking is that you could actually have a home office expenses if you're using your home office as a regular, ordinary, and necessary part of your business. Let's say you do admin job that you have to go to the house to do payroll, to do marketing, to do SEO. So you're using a specific place on your office, on your house. The percentage of that room could be deducted to the total size of the house. So for example, you're using 100 square feet of the house or 200 square feet of the home office, and then your total size of the house is 1,000. So you have a 20% indirect expenses from your utilities, internet, all those shared expenses that you commonly pay for your house. Okay, the business-related travel is another that you would like to pay attention, because if you travel, try to put some business conference on your travel. If you're going to go to Disneyland, why don't go to Development Economic Corporation, or the EDC, Economic Development Corporation, or Small Business Development Corporation. That's like you're doing your research, whether you're opening another clinic there, what's the latest in the research on your industry. You can attend conference, and maybe on the weekend you can make the most out of it by going or taking your family to Disneyland. So that is another way on how you can make the most of your expenses. And then always, please, letter P, please stay away from cash transactions, because avoiding cash for any income or expenses for Gloria can be minimized, because cash transactions can be difficult to track and verify, making it harder to provide income and expenses in an audit. It also reduces the risk of errors or misreporting. Cash transactions are prone to human error, such as forgetting to record or payment or underreporting an income. Letter R, regular financial and tax review with the pro. I do suggest there are 3 people that you need on your business. 1 accountant, number 2 is a lawyer, and number 3 is the lender. The accountant will always do a tax reduction strategy, but you need to make sure they specialize in that. Lawyer prevents you from trouble, and the lender will increase your cash flow. So by reviewing your financial situation throughout the year, you can adjust your income or expenses on retirement contribution to manage your tax liabilities effectively. That's why quarterly, I do suggest you're not overdoing and underdoing if you're doing a quarterly review, because you want to build your business in a stone, not in the sand, which means you don't want to do a lot of trial and error, where you could ahead of time proactively be informed on the different benefits that you can use and to protect yourself from any liabilities. The optimize your tax sheltered accounts. If you're working hard on your business, your money should also be working hard. So basically, what we do, if you're an S corporation, you could be we can open a retirement account that non-taxable. Let's say this Gloria, she has an excess of $24,000 a year. Instead of that being tax as an income, she could put that in a retirement they called executive bonus, where she only have to have 10 years. So it's a business deduction, 24,000. So her total executive bonus for her is 240,000 for 10 years. But guess what? When she reached the age 60 years old, she could receive a spread out money every year, not taxable, as much as 900,000 because it's like 45,000 every year times 20 years. So that equivalent amount is of almost 900,000 of non-taxable retirement income. You can also spread like your money in a 401k or IRA. Remember that any money or cash value that accumulate with permanent life insurance policies like whole life index universal goes on a tax deferred basis. So now, the other thing, aside from the tax deductions, Gloria is developing a mobile app. Let's say she would like to have like a communication faster with the client and the doctors, and the doctors to the clients. She developed a Gloria mobile app. She may be qualified for R&D tax credits. That's 20% of the qualified expenses. And maybe she started to buy her own plaza. Like instead of renting or leasing, she bought her own medical plaza. So if economically distressed communities, she could actually held for at least that she will hold the property for 10 years. Any appreciation on the investment is tax free. Then never forget letter I, another part of your deductions are independent contractors. The independent contractors could be your gardener, people that maintain in your lawn, even repairing your building, some maintenance. Those are all contractors. Or maybe you also have contractor that are nurses. So those are the things that you need to issue them at 1099 at the end of the year. But before you make any contract or payment with them, make sure they sign up a W-9. So the difference of W-9 and 1099 are W-9, it's established the agreement between you as the client and them as a contractor that you're telling to the IRS that they are in charge of paying their taxes. The 1099, it is the total amount of money you pay to your contractor that you issued before January 31 of next year. Then pay yourself for salary. I know that like you need to pay yourself. All right, so you have to put yourself on payroll because there are other bills that you cannot cover on your business. But you have, let's say you have kids. Gloria has 3 kids, so she has money to pay for their tuition. But where is she going to get that money? Of course, she's going to get to her in business. So instead of doing the owner's withdrawal, she can do a salary for she can issue $10,000 per month salary. That's 120,000. Instead of that being taxed on the business level, that is already going to be a business deduction. So it's all about the classification of your personal to become business expenses. And then lastly, number 10, you have to separate personal and business accounts. This is a common question of some of our clients. They were asked when was the best time to, what do you call this? When is the best time to really open a business bank account? Except from the time that you open your business registration, you need to have a personal bank account, business bank account already, because it actually solidifies and then gives you more commitment that you already have a legitimate legitimate business. So that's why we said how we help our clients are on the following through the tax pizza savings chart. We go through with the entity structure, record keeping, the payroll, tax credits, tax sheltered plans like the 401k annuities, IUL, and also the tax filing. So all of those things are covered by our services. And when you implement 6 of the services, we can guarantee that we can save you more than 23,000 on your taxes. Ideally, we would like to work with people that already have existing company and pay $30,000 because at the end, our month-to-month and yearly tax reduction strategy can create your wealth planning, whether you want to have a college funding, succession planning, estate tax coverage, and other mortgage or interest debt or income replacement that can be covered as that would be some of the benefits. Then why you entrust your business to YCO tax? We are worry-free around competitive and on time. And also the benefits of outsourcing this, you have peace of mind, save headaches, save time, save money, and faster access to grants and loans. All right, so if you would like to connect, just scan here our QR code. All you have to do is set up an appointment. We normally provide a 30-minute free consultation for our clients. So again, we would have this replay on our YouTube channel. Just watch, and if you have not follow us, just follow us on our YouTube, Chris White Coco. I also have my LinkedIn, Chris White Coco, and Facebook and Instagram, or White Tax. Again, if there are no further questions, we are here to help you. Just go to our website, www.whitecotax.com. And again, this is Christopher, and